Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What's going on in the markets today? Well, we got the Dow up about 60 points, NASDAQ up about 50 points. We had the CPI number come out. Now, the CPI number was not very good news. The reason being that we've turned back up. We're headed higher. Inflation's going up, but it's the direction it's headed. We were coming down, and now we're headed back up. Inflation comes in waves. We had the down wave. Now we're going to have the up wave, right? But don't worry, there's good news out there. Janet Yellen just came out and she said she feels very strongly about a soft landing. Doesn't that make you happy? Very strong feelings that we're going to have a soft landing. CPI number shooting up again. The reason for the CPI number going up, of course, is oil. Oil's going up, CPI goes up, inflation goes up. Things cost more. This is not good. This is not good. Now we got the stock market. We're sitting right on that 50-day on the S&P. S&P sitting right on the 50-day. Really hasn't done much in the last week. Kind of just going sideways, right? Trying to get the tug of war going between the bulls and the bears. Now, it's very possible this will break higher. Now, when it does break higher, it'll be more like a head fake before it comes down. Now, we've hit the high back in July, and then we've had another lower high in 1st of September, and now we're coming down. We'll probably get a little head fake up here, but I think those two highs will hold, and I think we'll start to make lower lows. Just my take. Here may be a moon boy. Straight to the moon, everybody. That's your take, not my take. Anyway, let's get over to the real estate market now. Just some lighthearted stuff. And people that are my age, they would remember the Brady Bunch sitcom back in the 1970s, right? Well, the Brady Bunch house, it just went on the marketplace, right? They were asking $5.5 million for it. $5.5 million. They sold it for $3.2 million. $2.3 million less than they were expecting to get. Now, why'd they want $5.5 million? Well, you see, they bought the house in 2019. They had a bidding war. It was bought by HGTV. They're the company that does the renovation shows, how to renovate your house and flip them for profits and stuff. So anyways, they went out and they got in a bidding war with Lance Bass of NSYNC, and they bid this house up in 2019. They paid $3.5 million. Well, that's not bad, right? They paid 3.5, sold it at 3.2. Well, no, they put $2 million into the house, renovating the house. So they're into it for 5.5, and they only got out 3.2. But Mike, that's a TV show. They made all their money back on the renovation of the TV show, Mike. And that's possible. I'm sure they made some money back on that. But these numbers are not uncommon. A lot of people that are renovating houses right now, they're getting slammed. They're getting slammed, especially on the luxury end. The luxury end is already dropping 30, 40, 50%. Now, the rest of the market's going to follow. The rest of the market still frozen up because no one wants to sell because you're locked in at that 2.8%. You got your equity. Now, I know a lot of people, they get upset with me. They leave comments, and some of those comments are not very nice. But anyways, some people hate me. I got my haters out there. Now, of course, I can understand why this is true. Let's say you went out and bought a house. Let's say you paid $800,000 for it, and you saved up a lot of money. You saved up that $50,000. You went and put all of it into the house, right? But the house has gone up in value. It's gone up, so you made a good move. It's at $1 million right now. So with your $50,000 down and $200,000 in appreciation, you're sitting on $250,000. And here comes this guy, Tall Mike. He comes out and tells you, that's going to get wiped out. It's going to go away. There's not going to be equity envy a year from now. Right now, a lot of equity envy. Look at you. You're up 200,000. Look at the rate. You got locked in at 2.8. 2.8. You're doing really well. And here comes this guy. And what does he know? He's just an old guy with a microphone and a computer telling you your equity is going to be wiped out. Telling you you're going to lose your down payment. Telling you the houses are going to go down by 30 or 40% from here, maybe even 50%. We're already down 10% in my area. A lot of areas are already down 10%, but that Brady Bunch house, that's just an example of what's happening to people right now. Investors are getting slammed. Investors, they used to be net buyers of properties, right? They bought them all up in your neighborhood. Anything that came up for sale, the investors came in and bought them. Well, those investors are now the ones trying to get out. They're trying to get out without losing their butt too much. Now, in the Brady Bunch house, they lost their butt. $2.3 million they lost. And that's just common. It's not just a one-off example. This is what's happening out there. A lot of luxury homes, they're being built on spec. Spec means they build the home with no buyer in place. And this is what's called the shadow inventory. They're not even putting these onto the marketplace yet. They don't even show like a house yet because they don't have a certificate of occupancy. So it doesn't count as a property until they file for the certificate of occupancy. They don't want to file for that because they can't sell the house. The house is too much money. They're going to lose their butt too much. And nobody wants to lose their butt too much. I'm telling you, they don't. They want to hold on to the house and rather have that loss. But as soon as they file that certificate of occupancy, they have to start paying property taxes on the house. As long as they don't file that, it's still a house in progress. It's not a house yet. So they don't file that, so you don't get to see these properties. They're like they don't exist. But there's so many of them out there. There's no inventory shortage. There's an affordability problem, but there's no inventory shortage. Now, what I want to talk today a little bit about is, well, just the system in general, but more in general, I want to talk about property insurance, right? People that are buying homes right now in certain states, California would be one of them, Florida would be another one, they can't get property insurance. The insurance companies are in trouble. They're going broke. Now, a lot of people think they're going broke because of the natural disasters, because of the hurricanes that hit Florida, because of the wildfires in California. That's just part of the problem. The real problem is, how's an insurance company work? All right. Now, when I was in college, I wrote this paper for one of my economics classes. I think the title was The Perfect Business. The Perfect Business, right? Now, I thought the perfect business would be to own an insurance company that only did earthquake insurance, right? And I'd sit there and I'd collect the premiums. Now, every 50 years out here in California, thereabout, we have the big one, right? The big one, there's a lot of damage, but I'd be in that business for 50 years collecting insurance premiums. We have the big one, I'd just go out of business. I'd go bankrupt, right? Because I couldn't afford to pay those claims. Well, that's where the insurance companies are right now. They can't afford to pay the claims right now. Now, the reason is not what you'd suspect. Not that there's too many claims. The problem is that they lost the money. See, they took all the insurance premiums come in, right? Well, what do they do with that? They don't just sit on in cash. No, they invest it. They put it into bonds. They put it into mortgage-backed securities. They put it into loans for commercial real estate. And what's happened to all these investments? Down 30, 40, 50%. So they don't have the money now that they're getting the claims. They don't have the money to pay the claims. So you got insurance companies that are in a lot of trouble because they're doing the same thing the banks are doing, right? Banks are in a lot of trouble. People get upset when I say that the banks are in trouble. Look at Moody's and S&P. They're not downgrading the banks for no reason. They don't want to downgrade the banks. Their banks are their shareholders. They want to keep the banks at AAA ratings, but they cannot because the banks are in trouble. The banks have lost your money, right? The banks, you put your money into the bank, they lost 40 or 50% of it, and they're begging for more money. They're willing to pay you 5.5%, some places as high as 6% now, because they need to get more money into their Ponzi scheme so they can pay out the people that come in and want their money out. Banks have lost your money. Insurance companies have lost your money. Don't have money to pay the premiums. You know who else has lost your money? Your pension. Your pension fund is not safe. You're going to get a haircut. Maybe it's only 20%. Maybe you're one of the lucky ones. A lot of pensions are going to be wiped out completely. Why? Because they took your money and they invested it and they lost your money. You know, some of these pension funds, they were investing in Bitcoin when it was $69,000. Look at 2/3 of that money's gone. 2/3 of it's gone. You can look it up for yourself. Google it. They invest in cryptos. They invested in FTX. They've lost your money. They don't have the money that's supposed to pay out. Now, who else doesn't have your money? Let me think. How about the federal government? They don't have your Social Security money. You paid in 30, 40 years. You're expecting Social Security. They've stolen the money. They've spent it. They don't have it. Now, don't get me wrong. They're going to print the money. Everybody gets upset when I say that Social Security is going to be a haircut, and it may be 20, 30%. But actually, I think they're just going to print the money. I think there's going to be bailouts everywhere. Everyone's going to get bailed out, but they're going to bail out Social Security. Now, the money that they give you, it's not going to buy very much. I'm telling you, what do these bailouts do? They got to bail out the pensions, right? They got to bail out the insurance companies. They got to bail out the banks, the savings and loans. They got to bail everything out, right? And this is printing money. They got to bail out Social Security. They got to bail out Medicare. Printing money. We have $100 trillion in unfunded liabilities. We're going to print more than $100 trillion. Now, right now, we're $33 trillion in debt. What happens when we become $133 trillion in debt? Well, eventually, of course, before then, the whole system blows up. I don't think we have 5 years left. I'd be willing to bet on that. System's going to go down. Something major is going to happen. Something's going to change. Now, if you listen to Janet Yellen, she says that we got this soft landing in place. She says we're never going to see another financial crisis in our lifetime. Look, this is the greatest financial crisis of our lifetime going on right now. Now, you may not be able to see behind the scenes what's happening in the banking world. The FDIC came out and said the banks are in trouble. This is the FDIC saying the banks are under stress. The banks are in trouble. Now, they can't give you the list of the ones that are in trouble, but a lot of these banks are going to go down. I'm afraid my bank's going to go down. I'm afraid of banks right now. They make me nervous. They don't have your money, right? So anyway, so there's a problem when the FDIC is saying that the bank's under stress. Janet Yellen can say soft landing all she wants, and maybe that's her job, to try to calm the public down. You know, my job's not to calm the public down. My job is to alert you what's going on. And what's going on is not a pretty picture. Look we have problems out there. We have bailouts coming. We don't have money to bail out, though, because we printed, just since 2008, we printed $30 trillion, right? I mean, the Fed has printed $9 trillion and we printed $20 trillion in debt. This is money we don't have. Somewhere we got to pay the piper, and that's coming up. It's going to be here within the next 5 years. Now, a lot of people think it's going to be here next month, and they could be right. I don't know. But then you get the other side of it where people get really upset, really upset. I mean, I got haters. They hate me when I say they're going to lose all their equity and houses are going to go down 30 or 40% because 95% of their net worth is sitting in that equity. They're house poor. They got their house, right? And a lot of retired people are like this. A lot of retired people have the majority of their net worth in their house. I'm one of those, right? I'm at the retirement age and I'm sitting on my principal residence where most of my net worth is in. But you see, when you have 95% of your net worth in your equity, and you got that equity envy thing going, but then I come out and I tell you that's going to get wiped out because I know it is, and it's going to come down. House prices are going to come down. Look, this bubble is artificial. It's artificial because we printed $20 trillion, $30 trillion just in the last, since 2008. That's a lot of money, and we're not done printing. We got the bailouts just starting. Social Security, Medicare, pensions, insurance, banks, it goes on, and there's a lot of problems with these insurance companies. I'm just talking about homeowners, but you want to talk about life insurance? Life insurance, they take the money, they invest it, they lose it, but here's the problem. They got to start paying out life insurance earlier. Why? Because we're starting to die earlier. Now, this just happened in the last 2 years. I'm not allowed to talk about this on YouTube, but you can figure it out. I talked to a bunch of smart people on this channel. There's a problem there, right? Your car insurance, it's going up. My car insurance just went up 30% year over year. Now, that's not inflation inflation, or I don't know what is, but the premiums they're going to be charging. Look at house premiums. When you insure your house, the premiums in California have almost doubled. In Florida, almost tripled. Some places it's just going a straight line up. On top of that, you got the property taxes going straight up. You got a lot of problems out there, and this is going to bring the houses down. People that bought the houses, they can't afford them. They cannot. Yes, they're locked in at 2.8%, but when they lose their jobs, and there's going to be millions of job losses, which is going to result in millions of foreclosures. This will be the forced inventory that comes onto the marketplace. It's coming. Sit back, be patient, relax. I mean, enjoy the show. First quarter next year, second quarter next year, it's going to get really, really ugly. I mean, maybe even the last quarter of this year is going to start to change things. There's going to be a recession coming. I'm telling you, Janet Yellen will say we got a soft landing. We got no recession. I'm telling you, she's dead wrong. Dead wrong. She has this, it's so backwards, but that's her job. Her job's to lie to the American people. That's what Jerome's pal job is, calm the public. If they knew what was really going on. Look, I know I'm preaching to the choir here, but you go to a shopping mall and you just start to ask people if they know what's going on about this. I mean, they think everything's rosy still, and this is the good time. You can get out close to the price Billy Bob got out of. Nobody knows what's going on behind the scenes. FDIC says the banks are in trouble. That's crazy. That's crazy. Anyways, I got a little carried away on a Wednesday here. Get out there, everybody. Enjoy the day, but share this video with someone. Why not? Give me the thumbs up, punch the subscribe button, and we'll talk again real soon now. Bye-bye.